In the previous video, we have discussed regarding what are stocks, what are stock market, the different participants of market, who regulates the market and etc. So we came to understand that a lot of like some of the background things around stock market, right? So we all are here. I think 90% of the viewers right here is actually watching this video because you want to be a participant of market. You want to actually access the market and to trade on, right? So if that is the condition, the single question that arises in your mind would be this: actually, how can I access stock market? Being a citizen, normal citizen in India, how can I actually access stock market? How can I buy and sell shares? So the answer, the simplest answer would be stockbrokers. In the previous video itself, we have discussed that, right? Stockbroker is a person who stands in between the person or the participants and stock exchanges, right? In more simple and easy way, let me just give you a very easy description of stockbrokers. Stockbroker is a person who stands in between a buyer and a seller. Okay, so if at all somebody needs to buy a stock, he will go to the stockbroker. Stockbroker will find a person who have that stock to be sold, so that he let us meet together and facilitate the transaction. Okay, so actually why does this person or why does this people called stockbrokers doing this? Obviously, like any other business, let us consider real estate business. How do actually real estate business go on? Basically, if at all I want to buy a piece of land in a place where I am not aware about, okay, so I go to that place. If at all I want to buy a piece of land, what I does is I'll go to a real estate broker. I'll go to a real estate broker and I ask him regarding the details of the land. The real estate broker will be giving me real explanation about the land. What is the previous price of the land? What is the current price of the land? If at all there is any developments that is going to happen around the land, he will be letting me know about that as well, and also he will be showing me the seller or the owner of the land. The same way he will be connecting me as well. And of course this real estate broker is doing this for a piece of brokerage, right? So a real estate broker is a person who facilitates a real estate transaction for a piece of brokerage. The same way stockbroker is a person who stands in between a buyer and seller to facilitate the transaction of stocks, and of course it is for a piece of brokerage. Okay, so in such case stockbroker is really important, we know, right? Because stockbroker is a registered intermediate. Okay, so we cannot just go to any kind of applications or any kind of things that we see here and access stock market in an actual way. In order to get access to the stock market in a real actual way, we have to be with the registered intermediates. Okay, so when it comes to stock brokers, there are majorly two types of stock brokers in India: full service brokers and discount brokers. Those are the two types of stock brokers we have currently right now in market. So the first one, that is full service broker, is a full service broker who provide with a lot of advisory tips, who provide with a lot of external services and also the brokering work as well. So he's a person who gives you a lot of investment tips. He helps you to invest. He gives you one-on-one call maybe of anything of that sort, like too much into service side. So it's a full service broker. The problem with full service broker is that they'll be charging you extra brokerage. The brokerage is pretty high when it compares with the discount broker. So basically discount broker is a type of broker which have flat brokerage or a very cheap brokerage. Okay, so basically their brokerage does not depend upon the amount of trades you take or the number of the amount you invest in. Actually, when it comes to full service broker, the brokerage is completely depend upon how much amount you invest. If at all you are investing huge amount like 10 lakhs, 20 lakhs or 1 crore, you will have to pay huge brokerages. But when it comes to discount broker, it is like flat 20 rupees, flat 30 rupees. So if at all you make a trade of 100 rupees or if at all you make a trade of 1 crore rupees, the brokerage will be same. So that is the benefit of discount brokers. So when someone asks you which one is better, discount broker or full service broker, which one is better, that's a question, right? So here I would prefer discount broker is better, but it is not for all, right? Basically full service brokers are better option if at all a person needs investment ideas, investment opportunities, tips, financial management, etc. If a person needs that kind of services as well with the broking thing, he can go for a full service broker. and if at all you are an active participant, if at all you know how the things works, and if at all you are doing it alone, then discount broker would be the best, and it suits you better, and it will save you a heck lot of money as well. So I prefer for discount broker, and I personally use Zerodha. Okay, now I gave you an idea that you as a common man can access stock market very easily through stock brokers. So how actually this works? Okay, stock brokers, unlike olden times, it's not in the brick and mortar form. I told you again, it is in an electronic form. Let us consider you have web applications and mobile applications for almost all brokers. So for my broker, that is Zerodha, that's what I use. Basically, if at all I am using Zerodha as my broker, I have a mobile application that is guided by Zerodha. So basically, let me just tell you in a very easy way how actually you and me can access stock market the easiest way. Okay, so you know the Amazon application, right? The Amazon application. So it is very simple to go and open an Amazon application, right? You click on the Amazon icon, the Amazon application is there. So you see a list of things that has to be sold, right? A lot of people around the world is listing things in Amazon. You will be scrolling through down, and if at all you need to buy a mobile, you will scroll and find a mobile you need, and you click on buy. Okay, so obviously it will be shipped to your address. That is how the Amazon works. The similar way the stock broker works. Zerodha Kite mobile apps just look like an Amazon application. You click on that, open it. First process is to open an account in Zerodha, or your trading account, to open a trading account. Actually, how to open a trading account and the link to open a trading account is in the description. You can have a see to that. Once the account is opened, you get an ID and password. Simple as that. So you have this application, you have the ID and password, you type the ID, you type the password, click on login, you are into a trading account right now. It is just like the Amazon application I just told. You have a list of all stocks listed in NSE and BSE, that is National Stock Exchange and Bombay Stock Exchange. You can scroll down. Let us consider you want to buy Tata Motors, okay? So you scroll down, or you click on search and search for Tata Motors, you find that Tata Motors of NSE is there, Tata Motors of BSE is there. Let us consider we want to buy Tata Motors of NSE. So you click on that Tata Motors NSE, you have two buttons, buy and sell. Okay, you go and click on buy, you bought the stock. Simple as that. So by clicking a button on this stock broking account, you bought a stock. It is simple as that. So there is nothing in complications, okay? If at all you are feeling complicated, because I know if at all you are a beginner, you might feel complicated, but no worries at all. You try it out, you start doing it, then it will be much familiar for you. Okay, now the question is this. Basically, people buy stocks and sell stocks. Basically, they buy at a lower price and sell at a higher price, or at least people plan to buy at a slower price and sell at a higher price. So what actually makes a person to buy a stock? Simple, right? Stock changes its price. Stock will move from 100 rupees to 200 rupees to 300 rupees, etc. So that is the reason why we are buying stocks, because if at all it's increasing its value, we can sell and make profits out of it. Alright. So every second and every minute stocks are fluctuating. The stock of 100 rupees is going to 101, 102, back to 100, back to 99, 98, 96. It keeps on fluctuating. What actually make the stocks to fluctuate, or what actually moves the stock? The answer is supply and demand of a stock, or in simple, buyers and sellers of a stock. You're not getting the point? I'll explain. Let us consider an example of fish. Fish in the sense edible fish, the fish we make curry or we fry or we eat, right? That fish. Okay. So let us consider a place which is less coastal area, cities like less costly areas, maybe Bangalore or something. Okay, the places there you see the availability of fish is very low, right? That is, people who are trying to sell fish is very low, right, compared to coastal areas. So what happens at a city like Bangalore? A lot of people would love to eat fresh fish, but they don't have access to it. So what happens if somebody bought fish from somewhere else or something? They can sell it at a higher price. They can sell it at a very high price, because this fish is rarely available. A lot of people want to buy that. So basically, buyers are greater than sellers. Got it? For fish in Bangalore, buyers are more than sellers. So the price of fish is very high. Okay. Now coming straight to the coastal area. In a coastal area where fish is very much available, almost every home they have their own fishing nets and boats. Okay, fish is damn available. Here the people who are trying to sell fish is very high, and if at all we go through coastal areas, we get fish, that is in the sense fresh fish, for a very low price, right? So the product is same here, fish, right? So in a coastal area where sellers are greater than buyers, the price of the fish was very low. Similar way, where a place where the buyers was greater than sellers, the price of fish is very high. So basically, in this case, when it comes to stock market or stocks, for a stock, if the buyers are greater than sellers, the price of stock will keep on going up, and if the sellers are greater than buyers, the price of stock will keep on going down. Simple way, I'll tell you. Let us consider the example of Tata Motors itself. So we are planning to buy stock Tata Motors. Why we are planning to buy Tata Motors? Because we got a news that Tata Motors is gonna go heck lot higher. So we are planning to buy Tata Motors, and what we are gonna do is that we will be clicking on the buy button. So just like what we have thought, in market there will be a lot of people thinking about buying that stock, right? Because it's having a good news. So a lot of people start to buy the stock, very less number of people are starting to sell the stock. So the price of Tata Motors will keep on going up. The same way, if a negative news comes, what happens? You and me and a lot of thousands and crores of market participants will start to sell it, because it's having a negative news. So what happens? The price of stock keep on coming down. So what happens in a very simple terms, if buyers are greater than sellers, the stock will go up. If sellers are greater than buyers, the stock will go down. Simple as that, keeping it very simple. Okay. Now, as I've told you, you can buy stocks and sell stocks, etc. So buying and selling actually can be divided into two types. Okay. The first one is intraday buying and selling, and another one is long-term buying and selling. What is intraday buying and selling? If at all you buy a stock and sell it today itself, you buy a stock today, sell it today itself. So that in the sense, buying and selling of a stock happens in a single day. That is an intraday trade, that is an intraday position, that is an intraday buy sell. Okay, the same way there is long-term position or long-term trade, that is you buy a stock, you don't sell it in a day itself, you might be selling it after a couple of months, maybe years, maybe 20 years, 30 years, it depends upon you. So you can buy and sell stocks either in a single day, or you can hold it for longer days, for a very long time. Okay. So what happens is, if at all you are buying a stock for a long term vision, let us consider you have stock for 2-3 years or something, you will be having a lot of corporate privileges, which includes the dividends, bonus and rights, and a lot more, because stock is a piece of company and you are a part owner of that company. Got it? If at all you are holding a single piece of stock of Tata Motors, you are a part owner of Tata Motors. So you will be getting the profit percentage, you will be getting the dividends, you will be getting the bonus, and you have a lot of corporate benefits. Okay, so that is why people actually consider stock market or keeping stocks as a very good investment, because you are becoming, or you are partnering one of the best or the bestest businessmen in India. So that's a very huge opportunity, right? Stock market itself is a very huge opportunity. You can go forward for that. Okay, so while explaining what is stock brokers, how actually common people like you and me actually access to stock market, actually buy the stock market, like stocks in the stock market, etc. We'll be speaking about that. And we know that we can buy stocks majorly from two exchanges, NSE, National Stock Exchange, BSE, Bombay Stock Exchange. Let us talk about NSE only, because for me personally, I usually trade on NSE, National Stock Exchange. Okay, so here, when it comes to NSE and BSE, they have to benchmark index. So what is an index? I'll come to that point. So basically, when it comes to NSE, National Stock Exchange, BSE, Bombay Stock Exchange, though both of them has benchmark index, let me talk to you. That is Nifty. Nifty 50 is the benchmark index of NSE, and Sensex is the benchmark index of BSE. So what is this Nifty 50 and Sensex? I guess it is a common terms for you, because you might be hearing it from news. People like talking about stock market will always tell about Nifty and Sensex. So basically, Nifty 50 is the top 50 companies in NSE, and Sensex is the top 30 companies in BSE. So top 50 companies average into a single thing called Nifty 50. Top 30 companies average into a single thing called Sensex. Okay, so those are the benchmark index. So why the hell there is something called index? So if at all to understand the top 50 companies, you actually can go manually and search for it, right? But here, why actually you need to be having such kind of something called index actually? So basically here I have 4 major practical uses which actually index have. So the first one would be information. Right, it's a very good thing, right? Information, that is what index actually gives you. That is, if at all I am an investor and I am going to be in the market, stepping into market, but I want to understand how the market is performing. I actually don't know how the market is performing right now, but I have to understand it. But it is not practical to go through all of the 1500 or 2000 companies in the exchanges and go through all of them. It is not practical. So for me, it is easy to have an index. So too easy to have a Nifty 50. So I go to Nifty 50, open the chart or see the details of it. I get to understand what actually the market is performing right now, because it is giving you the information of top 50 companies, right? So Nifty 50 actually gives you a very clear exact information on how actually the market is performing, how actually the overall market sentiment is. So information is number 1 use of the index. Number 2, it is benchmarking. So when it comes to benchmarking, what actually is this benchmarking? Like for example, I'll give you an example. If at all I am into market, I invested 1 lakh rupees the previous year. Let's consider 2020. So I have invested 1 lakh rupees over 2020 in 2020, and now it is 2021. And let us consider I have made a profit of 20,000. That is 20% of my capital. 20% is a real good profits, right? But when I check with Nifty, I understood that Nifty gave 30% of movement and my stock gave only 20%. Then which means that the profit of 20% I made is lower than the average, right? So Nifty 50 is a benchmark, and with this benchmark I consider my investments, my portfolio is below average or above average. So basically this index gives us as a benchmark, and it's a very big useful or big aspect where index are actually made for. Okay, and now the third one is trading. Obviously all Indian traders are obsessed with the index, Nifty, Bank Nifty and all. Everybody, like you know, right, the traders in market, almost everyone trades with index, and to make a trade or to trade and make profits out of it is another use of index. And the fourth one would be hedging. Hedging in the sense, if at all you are holding a very huge capital, or if at all you are holding a very huge position overnight or for a long term thing, and you foresee something bad is going to happen in market, so you can hedge your portfolio with indices. So that is the another aspect or another use for index. So let me just point out the four practical use of index again. It is information, the second one is to benchmark, third one is to trade, and the fourth one is to hedge your portfolio. So that is why actually indices are actually made for. So basically in this video we have learned how a common man actually get access to stock market, how to actually buy or sell, what are the things actually you should be doing, right? It is very easy to get access, and all we have learned about it. And also we have understood that we get a lot of corporate privileges while we are buying a stock for long term and all. And also we got a very rough idea regarding how actually market indexes or Nifty or Sensex has to be used, and how we can read market using this. So we have got a very rough idea regarding that, right? And moving forward, I'll be providing you with new videos or more videos which simplifies every single concepts of market, which literally help you to trade on market, to keep your hands on market and to trade profitably. So all these things you should be having or you should be knowing beforehand in order to step into market. So I hope you guys will be staying tuned, and please don't forget to subscribe. Thank you.